It's time now for today's strategy session. Investors are de-risking their portfolios ahead of President Trump's tariff date announcement, selling stocks, holding cash as uncertainty lingers. Another loser amid the selling, big tech. Joining us now, we got Michael Reinking, NYSE's senior market strategist. Michael, great to have you on here. So it's been interesting because we entered this correction. There was maybe some hope that the big tech names would get us out of it, but they haven't at this point. If they haven't done it yet, what makes us think that they possibly could? Should we let go of that hope that big tech is going to save us?
Well, look, I mean, I think, well, first off, thank you for having me in. Look, in terms of the big tech, right? I mean, right now there's a lot of questions around the AI, kind of entire complex in that story, right? So that has been a big drag on a lot of those names. You've seen them, kind of move pretty significantly lower. And you've kind of, you've seen multiples start to compress on a lot of those stocks. And if you look at the earnings estimates for those names, right, they haven't necessarily moved lower, right? So, I think there's a digestion period, right? I mean, clearly, we've come off of a couple of years where those stocks have kind of really, really led to the upside. You've seen kind of during Q1 some rotation out of that, right? But I don't think it necessarily means that. I don't think that they're going to necessarily lead us out, but if they stabilize, right, that's enough for the markets to kind of.
How do you think that companies right now are trying to best position themselves, though, in forecasting even through some of the uncertainty of how tariffs could impact their business? Because it's not just what we're putting out there for other countries to have to deal with, but also what the retaliation efforts might look like.
Yeah, and I mean, I think it's just really a very, very difficult environment. As you kind of look at what's going on, I try to think back through my career and trying to find like a similar analog, and there really isn't one, right? Because there's just the range of potential outcomes here are just so wide, right? So you think about that from a consumer perspective or a business perspective, it's very difficult to make kind of those decisions. We've seen kind of that consumer sentiment survey and business sentiment surveys have clearly moved lower, and you're starting to get a sense from companies that's starting to actually impact kind of business, right? I've been looking at some data from a New York Stock Exchange listed company, SimilarWeb, which looks at kind of web traffic, right? Looking at web traffic for travel and retail, right? That's been moving lower, right? So it's not just the sentiment, you're starting to see the clicks start to move lower. And then we've had some weakness in kind of the airlines and some of the retail names, kind of in terms of their guidance recently as well.
And even some weakness in Lululemon as of this morning here. What is that telling you just about the health of the consumer and more broadly kind of what the impact on profit margins of the health of the consumer sort of weighting might look like?
Right. Look, I think there's there's clearly caution, kind of from a consumer's perspective. I would say, just in my town, there was just recently a Nordstrom Rack that just opened up, a night or two ago, and there were lines around the corner, right? So people were showing up for deals, right? So I think, the consumer is, is cautious right now, and from a retail perspective, those companies have a difficult environment not only to deal with in terms of that, kind of in terms of that consumer, but dealing with tariffs and kind of the impacts of that as well. So. I'd imagine, kind of as we head into Q2 earnings season, you're going to see, management teams be very conservative, right? There's not a whole lot of upside in terms of raising your guidance, right? And I think there's going to be this conservatism, but we've seen kind of some guidance cuts. We're just coming out of a period of time where you had multiple investor conferences. We saw some guidance cuts there. We're in this pre-announcement window. We're not seeing a wave of pre-announcements, so that's kind of somewhat positive.
Right. One of the things that I was looking at, a note from Torsten Stock, Apollo's chief economist here, who had said the performance of the S&P 500 will depend upon the size of the adjustment costs as companies adjust to a new situation with permanently higher tariffs. And he was taking a look at some of the previous correction performance of the S&P 500 after 10% corrections. Just as you're kind of positioning your portfolio around what the rebound after corrections has looked like in the past versus the analog that we're trying to look for at this point in time, and there not being one, how should investors be positioning themselves?
Yeah, so I think right now, just kind of given the uncertainty, you have to kind of extend your time horizons a little bit, right? Think about kind of investing for the longer term, right? Continue with your plan, right? And understand, I think we've seen kind of markets kind of pull back on risk. right? And so just understand why you're in investments, right? Be comfortable, kind of move up the quality scale a little bit, right? So, I think there's just be cautious for the time being, right? And see how things play out over the next couple months.
Michael, thanks so much for taking the time here with us in studio.
Thanks for having me.